How we doing out there, traders? Are you guys hanging in? And welcome to it, Stock Market Movers, our brand new show here where we get into the headlines and of course we get into the expert opinions. That's really what this show is all about. You guys will get my view on the markets, but also get the expert views. We have a great show for you guys today. We're going to talk about PPI. We'll talk about inflation. We'll touch a little bit on the housing market, CoinBase laying off 18%, pilots getting a raise, and the FOMC Outlook and more. So stick around. We got a great show. We also got Tom Siomades, Chief Investor Officer at AE Wealth. And we also got Carlos Legaspy, President of CEO of Insight Securities. We're going to go ahead and get into it. You guys do me the favor. Start us up with a thumbs on up. And are you guys ready to get the headlines? Let's get it started. Welcome to Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
All right, traders, welcome to it. Let's go ahead. Let's first dive on into the big news of the day. Of course, everyone was watching to see what would happen with the producer price index here, and it rose about 0.8% here for the month and 10.8 over the past year. And one of the things that we're going to keep on watch is, was this going to give us a little bit of a relief rally or not? I mean, of course, we had that horrible CPI data. The monthly gain was in line with estimates, as the annual gain was slightly off the record of 11.5 put in earlier this year. So let's go ahead. Let's take a look here really quickly at where the SPY is trading at right now. We are getting a little bit of a bounce here, into the market today. I thought we would get kind of just a quick bounce or maybe an inside day. We're coming down there towards 373. Now we're really starting to see a little bit of a push back here towards the VWAP. We'll see if we can get above VWAP today. One thing I have been seeing on the price action, we've been seeing rejection from those levels. But for wholesale prices, energy made up May gains here. The index for the final demand energy rose 5% on the month, part of a 1.4 surge in the final demand goods here. The goods and services imbalances have been at the core of inflation pressure. So one of the things that we're seeing is the consumer demand has shifted strongly in an economy that is generally and more dependent on services. So we're going to go ahead and see one of the things that's also been mentioned now, and we're getting more mentions, is of course the CME Fed Watch tool is now showing a greater than 90% chance for a 75 basis point hike rate. And of course, you guys can check out the tool from the CME group, but this is really interesting. I remember there was a time when, mentions of 75 basis point rate hike would have got thrown out the window with that. And now we're actually hearing mentions of that. And it could even go even higher than that. I mean, I don't think we'll see higher than that right now. But of course, there's starting to be those mentions. Now, one of the things that we always do is get into what was hot and what was not. Normally, we'd get into this before we get into our interview, but we're going to go ahead and save that for after our interview. We got a lot to get into with that. But before I want to get into our interview, I did want to touch a little bit about the housing demand falling fast here. And I think it's important to kind of keep an eye on what's going on here with housing. The U.S. housing market is at the beginning stages of the most significant contraction activity since 2006. Len Keffler, deputy chief economist at Freddie Mac, tweeted on Tuesday that it hasn't shown up in many data series yet, but mortgages applications are pointing to their largest decline over summer. Keffler said, noting that home purchases applications are down 40% from their peak of last year. I think this is a great way to go ahead and get into our interview today. Let's go ahead. Let's bring on our guest for today. Let me just find his banner right quick. There we have it. Let's go ahead. Let's bring on. Here we go, guys. Let's go. This is Tom Siomades, Let's bring him on here. This is the Chief Investment Officer at AE Wealth Management. Welcome to the show and welcome to your first time here.
Hey, thanks, Money Mitch. A little advice, bro. We could take some of the big money you're making out there in the markets and invest it in ethnic pronunciation name lessons. So my last name's pronounced Siomades.
Siomades,
There's no R in
Siomades.
there, man, and it's Greek for those who are wondering.
Siomades. There you go. I got you,
All right,
man. I'm
all
gonna
right,
definitely
buddy.
take the lesson. No worries. We'll get it right here. All right, let's go ahead. Let's first get into how you feeling about inflation, Tom?
So it's interesting. I heard your intro, and I'm of the camp that I just don't see a plan to address things.
Mm-hmm.
And I get it that the Fed's going to meet tomorrow. Last week, like you said, it was almost a slam dunk, foregone conclusion, 50 basis points. Now, fast forward a few days later, we're going 75. This is the same guy who last month took 75 off the table and said there's no way we're going to do it, and then he sprinkled the pause out there. And that's what kind of got us off the lows, the more recent lows that we had in May. We rallied back up. I don't think anything's changed between then and now. You still, the thing that has changed, however, is anybody who was remotely awake could see that May, from a price standpoint, was going to be worse than April, right? Yet the sort of narrative that was coming out was that we were going to see this steady improvement from March to April, and then we were going to be like 8.1, 8.2% in May. Yet every day, all of us heard in May was what? Gas prices, new record, gas prices, gas prices, gas prices. Everything was going up. So that's the issue that I feel is the foremost one. I think we're to a point with inflation now where it's not just a Fed lift, right? It's going to need help from the government, and I don't see any kind of anything coming out of that quarter that's, they're still talking about more spending, student loan forgiveness, blah, blah, blah. Okay, how is that going to help inflation? So I don't feel good about it. I also don't think that I don't also think we're going to go from 8.5 CPI to 15.5. I think most of it's as gotten as bad as it's going to get. I just am wondering how long it's going to take for us to start seeing improvement.
Yeah, I was seeing yesterday Biden calling out Congress. That might be a little bit of what you're kind of talking in there. But another thing is, of course, the ugly R word, and I know a lot of people are throwing that around. And how do you feel? Do you feel like we're heading towards that recession?
Honestly, there's if you measure it from an economic standpoint, maybe not. I'm just looking at it for the way people are behaving, and I'm looking at the way people are feeling, right? And it already feels like we're in one. Now, is it going to be a big deal if this coming quarter we print a positive 0.07% and we were negative 1.5 the prior quarter? Average that together, you're negative. So I don't know that anyone's going to feel good about the economy growing at less than 1% any better than they would if we were flat or negative. So I think in a lot of ways we're already there. I think the official definition of this stuff is always, up for debate by academics, but you just got to look around. It feels bad. It feels bad every time you go out of your house. It feels bad every time you go to the grocery store or to the pump or you get, your utility bill. I mean, maybe it's not a, classic definition, but it sure feels like a mental one. It really feels like an emotional recession at this point.
Definitely. One thing that I'm going to be watching, and I know everyone will be watching, will be looking at will we be getting that 50 basis point hike or will we get the 75 basis point hike? And how would the market react on either or? Do you think that we could get potentially a rally off of a 50 basis point?
So a 50 basis point would be sort of like it's closing time at the bar and you think you're going to get kicked out, and then the owner says we'll keep it open another 15 minutes. That's what a 50 basis point is going to get you. You'll get a rally because, you're going to have access to cheap money for that much longer, but it's going to make things overall worse, right? So like I was saying earlier, we went from a near certainty of 50 basis points tomorrow to now it's almost flipped around to 75, if not higher. Now, that's a one-time thing. Now, remind everybody as well that we're here and we've only raised 75 basis points so far this year. So tomorrow we could potentially double that. So let's say we've raised 1.5% and we've sold off over 20 in the equity markets. So a lot of this is going to be, how does Jerome Powell approach the podium tomorrow? What does he say? If he pulls the kind of, weak need stuff that we saw in May, where he says, well, we'll go 75 today, maybe 50 the next time, and we'll see where we are in September. Wrong message. The market's going to say he's going to chicken out again. So my view, if I were Jerome Powell, but I'm not, so it's you and I just have our opinions like everybody else. I would say, look, we're going 75 at every meeting so far this year. Okay. And we're always going to evaluate numbers. That's what we do. That's what we're supposed to do at a meeting. We're supposed to check the economic conditions and whatnot. But if you at least provide a clear roadmap to markets, that's fine. At least the field isn't being changed under your feet as you're trying to play the game, right? So if he comes out with a concrete map of where we need to go, and then lo and behold, come September, October, inflation has gone from 8% to 5.5%. That's a really good time for him to say, well, you know what, we're going to ease back on on our aggressive measures because we've achieved our goals sooner. And then the market takes off from there. But at least if you give the market the worst case scenario, we can at least start figuring out how to go forward.
Excellent way to put it. Now, one of the things that we're watching is how the interest rate hike rates are affecting the housing market right now. How do you feel the housing market is taking these rate hikes? And is there any true concern here for an impending housing crash?
I don't know about crash, but I will tell you this time last year, 30-year conventional mortgages were about half of where they are right now. Okay. The cost of home ownership via financing has increased substantially. And the challenge is for a lot of people, especially people getting into their first homes, it's an extra $500 or $600 in financing costs that they don't have. That's one. The other thing is, post this pandemic thing, or it started during the pandemic, but it's continued on. There's just a lot less inventory out there. So people can't afford houses, people can't find any that are available, so it's going to keep the price artificially high. The problem that I have with the higher interest rate is, if you don't have that sort of machine grinding, the bigger implication for the economy is, like, think about it. You buy a house, whether it's a new house or you're stepping up or whatever, you're buying, washing machines, you're redecorating kitchens or remodeling, blah blah, all that stuff that fits in there, that whole, like, Home Depot, Lowe's, hardware store, furnitures, everything, it all adds up. So that's my biggest concern with this, is that higher interest rates will prevent more people from moving into homes, and then lack of availability is going to keep prices artificially high. So I don't know how long it takes before we have a correction. I just don't see the growth continuing at the same pace it has been.
Yeah, it's definitely hard when you have problems on both sides, right? Supply, and it looks like
Yep.
demand is going to be also an issue here. So we'll see what happens there. Now, what should we be looking for maybe in weakness in the consumer spending and retail? And do you see maybe potential demand destruction coming from these impending interest rate hike rates?
Yeah, I think it's a couple of things, right? So we've had a lot of spending that's been brought forward because people were just cooped up. Stores were closed. You were being hassled at the airlines, having to wear a mask and all of these COVID protocols, so forth and so on, right? People didn't go on vacations, people didn't do things, right? So all of a sudden, all of this, with vaccines on board and masking requirements, lowered, and the virus for the most part being held in check, a lot of people are out there. So the interesting thing about this is, I think a lot of people said, I need to go do something, don't care how much it costs, I need to do this. So that's why you had this glut of rushing, people rushing to, travel places, hotels, whatever. So that's all done at this point. And I think what's going to happen is, you're going to have this summer of exuberance is going to be replaced by this fall of discontent, and just, you're going to get those bills, right? And at first, when you get your credit card bill for the vacation you went on, you're like, man, this $10,000. That was a great vacation. Well, a month later, it's going to be $9,500 because you paid a little money down on it. But you're going to remember the vacation even less, but you're going to keep getting that bill along with all the other cost of living stuff that's going on. That's destroying the savings that had built up quicker than they would have in any other way. And on top of that is people are just paying crazy money at this point because they I look at the way I would justify it is I would say, hey, if I'd gone on vacation 3 years in a row, how much would it have cost me? Okay, then I just add it all up and say that's how much I'm going to spend this year. But I don't know that I would continue to spend that going forward. I mean, that's a really like glass half full way to look at it. But at the same time, it's like that's kind of what people have. I mean, who'd have thunk? I flew to, Louisville, Kentucky from Kansas City, $1,100. Who's doing that? Who's doing that? I mean, used to be able to fly to Europe on that, right? So that's the
Yeah.
type of stuff that just crazy spending because people just need to do something, right?
Mhm.
And once they do it, they're not going to repeat it because they're going to look at the and by the way, the higher interest rates, you get yourself a nice little balance on the credit card, and all of a sudden those APRs that start adding up, and you're like, man, I paid $500 and my balance only went down, $300.
Yeah.
That's what 17%, 20% APR is going to get you. So,
Yeah, I mean, it was definitely a different time 2 years ago when we were able to save up a lot, and those savings accounts probably went up a decent amount. And now they're noticing, hey, those savings accounts are flying through faster than we probably all could have
mhm.
imagined. But thank you for joining me today, Tom. We'll definitely bring you back on here, and I appreciated your insight there, especially getting into kind of the outlook of the recession. I think that's an important outlook because at the end of the day, we're still seeing kind of consumer spending up. We're still seeing inflation kind of showing on up, and I mean the gas stations are relentless. But one of the things that we are seeing is can we finally get through the area and the housing market showing us that supply issues and demand issues. I like that you brought both of them up there. So we'll keep on watch. Thank you for coming on. This is a chief investment officer at AE Wealth Management. And one of the things that I do like that you guys gave is that weekly insight letter. So check it out, guys. I put it in the description below so you guys can check out that insight letter weekly and get all the insights that AE Wealth is going ahead and putting out for you. And definitely reach out to Tom for some more.
All right, thanks, Mitch. Take care.
Thank you. All right, guys, let's keep it going here. Let's go. That's what it's all about here on Stock Market Movers, to bring on the expert opinions that you guys want to hear. Let's continue on. Now we're going to get into what stocks were hot and what stocks were not. So let's go ahead. Let's get back into that. Normally we cover this in the beginning part of the show, but we got a lot to go into. So let's go ahead. Let's dive right in. So what stocks were hot and what was not? Let's go ahead. Let's take a look. This will always help us out. And of course, we're starting to see the SPY did hold for a second there above the VWAP, but starting to come right back down there. Checking out some of the comments. How we doing out there? Jay, Market Fiend, Anthony, what's going on, guys? It's good to see you guys in the chat. Definitely smash up the like. Let's keep on going. Let's see if we can get to 200 likes today. Let's go. Come on. Last time we got on up there towards 500 viewers and 200 likes. Let's get it on up. Let's keep going here. Next one, let's talk about what was hot. So today, oil companies were actually doing really well. And I did see mentions on Gush here a little while ago. Now we're starting to see a little bit of a turnaround here, but they were pretty strong here in the morning. Let's take a look here at XOM. XOM was getting on back there towards 98.71. Now you're seeing a little bit of a turnaround there. So we'll definitely kind of see what's going on in oil if we're going to continue to see this weakness come on in towards the end of the day. But travel stocks were bouncing back a little bit too. Let's see if those are giving up those gains. So you can see here, RCL kind of down again here. Norwegian cruise lines also down here. So travel stocks just not holding on here. And you can see Hilton still kind of bleeding out there. Airbnb also bleeding out. So just not looking good here in the traveling stock as we're starting to see some of that demand destruction show on up. Also FedEx, though. FedEx today releasing some news. So let's go to FedEx, FDX here. FedEx is having a great day today after, of course, it jumped a really good amount. Now we're looking at it. It's about 14% from that move off the 200. And it's been a great day after they increased their quarterly dividend by more than 50% to $1.15 a share. We'll see if this can continue to run, but not a bad move there for FDX today. Let's go into Twitter now. Twitter, you guys like the Twitter. What's going on here? Shares are adding 2% in the morning, and it was going up there towards 2.2. Now it's just started getting into the red. But Elon Musk will address Twitter employees during an all hands meeting this week. So keep your eyes on for catalyst coming out on Twitter. All right, and gambling stocks catching a little bit of a bounce there. So if you want to take a look at some of the gambling stocks, DKNG getting a little bit of a lift today. We'll see if this can continue to run. It's up over 5.8 now. And we can take a look at Penn. Penn was also up on the day. I'm taking a look at to see how these gambling stocks perform. Right now, they're up on the day. We'll see if they continue to make moves and continue to move on up. NIO having an awesome day, guys. This was up over 16% when I was looking at it. Now up over 18.7. And just to kind of give you guys some insight on NIO, I talked about it yesterday, but we can go ahead and go over it again. They will be having a product launch event that starts at 8 a.m. Eastern. This, to me, is one of those buy the rumors, sell the news events when you're seeing a stock push on up there about 18% going into this product launch. It could be a sell the news event tomorrow, but definitely keep it on your radar. NIO product event that will start at 8 a.m. Eastern tomorrow on Wednesday. All right, another area to kind of keep on watch is, of course, look at the other Chinese EVs as LI and XPEV. We're having an awesome day there also. So looks like in China, we did catch a little bit of a bounce because you can see JD, PDD up also great amount today, up about 12.79. Baba also up on the day. So definitely keep your eyes on these Chinese names as they're catching a little bit of a bounce here. Let's go take a look at Ford. Ford today releasing some news, and definitely I don't think they were thinking that this was going to happen today. It's actually up on the day right now, but Ford is instructing dealers to temporarily stop selling electric Mustangs Mach-E crossovers due to the potential safety defect that could cause the vehicles to become immobile. I think this is important definitely to keep on watch. Ford coming out with a really negative catalyst here, but yet it's up on the day. This could actually keep it from coming on up here as it keeps trying to push on up, but eventually I'll look to see if this breaks down and you start seeing some negative coming right back into, let's say, the 1188s there for Ford. Be careful on out there, guys. Oracle, let's go into our earnings here. That was yesterday after the bell here. And the news was that, Oracle's actually rose 9% there off on the after hours trading here. Earnings per share, and let me go ahead and put up the banner here for you guys. Earnings per share they beat here at $1.54 adjusted, beating the expectation of $1.37. The revenue was at $11.84 billion, beating expectations of 11.6 here. Good day there. Now you're starting to see some of this sideways action. This is why I like using the hourly charts, because if you take a look at the hourly chart, this just looks like an hourly pullback to support, holding around this 69.30s, and you could get that next ramp on up through here, getting it up there towards the 71.75s. We'll see if Oracle can close up towards the higher price point of that pre-market action. We'll look to see a close, let's say, above 72.50 to show us some strength here in Oracle. Of course, take a look at Salesforce too. You could take a look at Salesforce, see how that performs. It's pulled back here, but a good day would be a close back above 169. I'll keep this one on our radar. What's going on in the chat? How we doing on out there? We're going to keep going towards 145, but we'll bring on our next guest. Looks like my man wants to take a look at the Shack. The Shack. We'll check it on out here. Let's go to Shack here. Shake Shack. Shake Shack is a stock that was at one point, I think, $100. Let's take a look at the daily chart. Yeah, it was more than $100. It's at 133s, has now come down towards 39. That's about a 60% retrace. But where is this going to stop? I would take a look here at the weekly, and you wanted to kind of get some resistance that it starts building up near this kind of 40-47. Let's take a look at the monthlies here. You can see that one as a resistance, and then now I'm looking to draw the support around here. And I would draw it around, let's say, 33.46. So somewhere in between there, I want to see some sideways action come into the name so that we could actually start stabling out and then getting back into a trend. Right now, it doesn't look good there for Shake Shack. It looks like it wants to continue down, but could catch a bounce. Appreciate the like, Dave. Thank you for hitting the like. Like always, guys, support us as we support you guys. We're going to keep going through and getting to the experts, because that's what this show is truly on about. It's about getting you guys the expert opinion you guys need to keep the informational edge. So smash the like if that's what you're here for. And let's go take a look here. I want to get into a little bit of what is going on in Coinbase here. I was going to save this for a little bit later, but let's go into that. Let's go into Coinbase here. They lay off 18% of their workforce as executives prepare for recession. If you take a look at Coin is now down towards $50. Got to a low yesterday of 46. And this could keep coming down. I think you eventually might see Coinbase a $20 company. Yes, I said it, guys. A $20 company after this stock IPO'd somewhere around 350s, went up towards a high of 429. And if you draw a retracement from that high, you've got now an 89.5% retracement, somewhere in the 90% retracement. That's where I'm going to start trying to attack this. Around the 22 level, you'll be at 94, almost 95 retracement. That's where I'm going to really start taking a little bit more of a shot around, let's say, the 20 area. And then we could start maybe trying to call the bottom on Coin. But for right now, it looks like they're going to be in a world of pain. CEO Brian Armstrong pointed to a possible recession and a need to manage costs and growing too quickly during a bull market. We appear to be entering a recession after a 10-year economic boom, Armstrong says. And while it's hard to predict the economy or the markets, we always plan for the worst so that we can operate in the business through the environment. So Coin giving you warning signs that they're seeing impending doom, at least for the short term being. And then what are they doing to adjust? They're laying off some of their workforce. The exact thing that we're kind of looking forward to see what happens in inflation. Does that start showing up where we're seeing multiple companies should do this layoff? And then we really would start getting into more of that recession talk. We've been paying attention closely to the jobs number, but we haven't seen it really show on up. As you guys can see, certain companies are giving us a sign that it could be a continued downside and continued layoffs, as also mentions of crypto winter. If you guys don't know what crypto winter is, just look up the term. You might learn something about the cryptocurrency market. All right, and another terms we'll be getting into in the second here, American Airlines. I'm looking forward to our next interview that will be at 1:45. So stick around, guys. This is the show where we do get through the headlines and also get to the expert opinions. I'm super excited. We'll be having Carlos Legaspy, President and CEO of Insight Securities. And I'm super excited to talk a little bit more about his story when he comes on. So stay tuned for that. Let's go ahead. Let's get into American Airlines here. American Airlines is stepping up to the plate to try to deal with their kind of pilot issues that they have right now. So let's take a look at the stock first. Stock is now down towards 1292s. We're heading down, it looks to it, to the pandemic lows. Will we get there? I'm not sure right now, but we got the lows of 825. That's the ultimate low here on the chart there, going on down there. Will we be getting down there? As we were sideways for a long time, and now we really started breaking down on this chart. So next stop for us first is going to be around 1275, and you can see this low from March 8th, which is 1244. We'll see if we get through those levels. But American Airlines regional carriers they hiked pilots' pay more than 50% as the shortage persists. So the increase would make the pilots the highest paid in the U.S. and regional airlines. Piedmont and Envoy pilots will get 50% pay premiums through August 2024. So now they're looking at $90 an hour, up from $51 an hour. And so first year captains, who knows? Maybe sign me up. I might be flying some planes soon. We'll see what happens there, but definitely not a bad little raise there for the pilots, as persistent shortages of pilots is still hindering the growth at the time of strong demand. So airlines are trying to make sure that they have the pilots needed to run the routes that they want to go ahead and run. So with that being said, they're trying to continue bringing in more employees, more pilots, by showing them some attractiveness here and increasing the hourly wages. We'll see what happens with American Airlines, and if this can kind of change it up. From right now, it's not looking good in the travel industry. UAL, DAL, you can take a look at all of them. They're really pointing down towards the downside. This could mean potential demand destruction coming into the airlines. We'll continue to watch to see what happens as we get in comments that the demand is high, but also we're seeing the price turnaround be significant right now. All right, in just about 3 minutes, we'll get into our interview. Last thing I want to kind of touch, and we can talk a little bit about this, is the FOMC outlook, right? And I think we're getting into a point where we really want to see, of course, what goes on with the 50-point basis hike, or do we get a 75? But also what I want to watch is what I've seen really push down the market at times. And what is that? That's the selling off of the assets. When I first saw mentions of that back in January is where we really started seeing the market come on down. So maybe we get an increased talk of that. Maybe we get an increase that they're trying to sell off the assets at a faster pace. That's what I'm going to be watching to, and we'll see what happens with Powell in his speech. Of course, there's always some fireworks there, Q&A coming into play. So we'll definitely keep on watch on the FOMC. If they go up to a 75 basis point, will that really help to defeat inflation? Or do we need a couple of these to really get ahead? And one of the things that we always talk about is the Fed is data dependent. So with this being said, a lot of the times they're going to be late to the party. I think that a lot of people don't think about this, because if you're data dependent, a lot of times, what are you doing with data? You're taking data off of what? A prior time, right? A past time. And with that being said, to get ahead of the numbers, they would have to go ahead and make assumptions versus moving off of strictly the data. And I think that's what we're seeing here is, yes, inflation is still high. The Fed is behind the ball, but on purpose, because they're watching the data to see when it's going to change and they can lighten up. We'll see what happens there. Like always, we got to keep on watch to see what Powell says in the FOMC meeting. And that'll be tomorrow at 2 p.m. Eastern, right after this show. But tomorrow we will be having the boot camp on. So look out, because we will put on the FOMC stream on this channel. So you don't got to go anywhere, and stay right here with Benzinga. All right, guys, in a second, we're going to get into our interviews. First things first, let's go towards a little trailer of BZ Pro, and then we'll go ahead and bring Carlos on.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protective connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, I'm super excited. Let's go ahead. Let's bring on Carlos here. This is Carlo Legaspy here, the president and CEO of Insight Securities. Welcome to the show, Carlos.
Hello, Mitch. Pleasure to meet you.
Pleasure to meet you, sir. And one of the things I want to say right off the back is, if you guys want to do me a favor, check out Going for Broke, how one Latin American's largest financial fraud became a blessing in disguise. I put the link in the description here, and that's Carlos's book. And I have to say, as a fellow Latin American, Thank you for all you've done for everybody that's trying to follow in your footsteps.
Thank you. Well, it's, you just got to deal with things as they're thrown at you. And yeah, that was a big curveball that the universe sent my way. And fortunately, we were able to overcome the challenges, and we learned a lot along the way. And the book describes mostly the lessons learned. That was my purpose with the book. It's hopefully other entrepreneurs coming into the space may learn through my experience, so they don't have to live through what I went through, and also just to hopefully inspire that we got to go for our dreams, and sometimes we got to be ready to get a bloody nose if we're going to get on the pitch, but it's worth it.
Definitely. And probably with that bloody nose, we still got to stay quiet and patient about it, right? And so that's the fun part of life, is that you got to roll with the punches. And I love how you mentioned paying it forward to others out there, because that's really the best thing that we can do. We've gone through an experience. If we can pay it forward to others so they don't have to go through that same experience and benefit them. Now, let's know a little bit more about you, Carlos, and what you do as the CEO at Insight Securities.
Well, so I came to the U.S. In 1990. So I've been here for 32 years from Mexico. And I started in the financial industry as I came. Was working for, at the time, a Mexican bank that had operations in the U.S. The mid 1990s was a challenging time for Mexico. There was a big financial crisis that forced the banks into control of the government. They in a way, we all got laid off. And so I had a choice to either go back to Mexico, go find a job at a wirehouse, or go on my own. And I chose the latter. I always had a dream of owning my own firm. Took me a long time, but I started with my own advisory firm, and over the years I built up capital, and I bought a broker dealer in Chicago in 2012, 10 years ago. Focus on serving other advisors like me that cater to Latin American investors. And so right now we have clients from the Rio Grande down to Patagonia, Brazil, Chile, Mexico, Central America, South America. So that's our niche, and I'm very proud of it.
Love what you're doing there, and definitely giving back to the Latin American countries and trying to help others get towards the financial markets. Always a great help. Definitely. Let's talk a little bit about the Fed expectation and what you're expecting to see tomorrow in the FOMC. Are we seeing 50 basis points, 75? Could it be 100? Let me know, Carlos. What do you think out there?
Well, it's one of those things that Jay Powell said, "Oh, if 75 is off, it's off the table," because he was kind of forced to it in a Q&A. However, if they are truly data dependent, that comment is not a limitation. It's, I think, a more aggressive action is warranted right now, and I think that the market would calm. If he did 100 basis points, you always have a fear. Oh my God, everybody's going to. What is he seeing? Is he panicking, and that's why he will go in 100? He's seeing what we already saw. Very, very high inflation, and is one of the benefits of being from Latin America is that we have lived with high inflation for many years. So we understand what it takes, and what it takes is you have to have interest rates, positive interest rates. That means that the rate of overnight rates have to be above your target inflation. It may not be above your existing inflation, but above your target. So if they say that the inflation or the goal is to bring it down to the long-term trend of 2%, you cannot do it with Fed funds below that target. So that means that at the very minimum, in the short term, it has to be 2.25, 2.5. So it's kind of like the quicker you get there, the more credibility you build that your top priority is fighting inflation. And the fear, of course, is that that's going to force a recession. However, in inflation on itself, what good is growth if everything is eaten up by inflation? So I rather take my medicine, maybe have a couple quarters of contraction, to resume a longer trend of growth. So I think that's one of the market wants. It's counterintuitive, but I think the quicker we take the medicine, the quicker we get better, and then we go back to where we were.
Yeah, and I kind of agree with that statement. One of the things that we've been seeing is the Fed trying to say that they're getting ahead of inflation, but really that's not what we're really seeing. What we're seeing is them kind of be more behind the ball. And one of the things that I think we've all been looking for since probably last year around this time was, when will inflation truly start peaking, right? When would we actually start seeing that peaking? And I mean, it started last year. It's gone pretty much for over a year now. And it just seems like that whole transitory thing just wasn't transitory. Let's go ahead. Let's get out of a little bit of the Fed talk. We can talk about this all day long, I'm sure. But let's talk about what sectors you're seeing out there, maybe strong, showing some relative strength, or maybe showing some relative weakness. Where do you see some strength, and maybe where you see some weakness?
Well, one of the market selling off because of forced liquidations, tapping on the crypto world, what's happening, just human nature, and people, just can't bear it and just get me out at whatever price. So when correlations go to 1, everything is trading in parallel. That gives you unique opportunities to switch sectors. So saying, all right, let's assume that inflation is going to take time to come back to normal. Well, certain companies benefit from that environment. Companies that may have a fixed cost, and they have pricing power. So that means that they could sell their goods or services at a higher price and improve their margins. That's a good place to start. You have, everybody loves energy. And one of the things that I was encouraged by seeing the recent sell-off, that even energy stocks went down, which tells me it's not really following fundamentals. It's just a source of liquidity. So I will only recommend our clients at saying, okay, what would I like to own for this new environment? And if you have cash, start nibbling around the edges and start buying some. And if you don't have cash, and maybe you're caught with your fingers in the door because you had one of those old momentum stocks that are no longer working, make a decision to get rid of them at an appropriate time. And one of the also good things of being through a lot of bear markets is that some of the most vicious rallies come during bear markets, and doesn't mean that it's a turnaround. And that's the mirage, is that, hey, I'm going to get rid of this and this and this and this. And you know what? At the first rally, I'm out, and I'm going to change my mind. So that conviction, that discipline serves the investor to see beyond the current market, because bear markets happen. That's part of the changing expectations about future value of earnings and all the factors about the equity market. So if I, as an investor, have a long enough horizon, I could adjust, have the plan, talk to your advisor, design the plan, and then just be opportunistic to execute. That's a way to navigate something like this.
Definitely. One of the things is that I think a lot of times as traders, we're too, with the blinders on, right? We're too focused on what's really in front of us versus what can come ahead from this opportunity. I think about it as a time when the pandemic first hit, and everybody was watching that, that hard decline, but the markets did rally after that and gave us a great opportunity to get prices at discounted rates. So I love how you're approaching it there, Carlos, and that you have to, maybe you're dipping your toes in, but with the prospect that you have a long-term plan really set in place.
Correct. It's always like, it's always, you have to buy when there's blood on the street, if some of that blood is your own.
Yeah. Yeah, that's true. That's true there. I know how that one can be. So what investments are you guys looking at, or maybe any individual names that you want to touch, or is there maybe a theme that you would focus in so that
Well,
we can kind of take a look?
well, obviously, I have my compliance guys watching over me, so I cannot name individual names, but I
Yeah,
can.
we'll go themes maybe
We go
here.
themes. How about that? So one of the things that it's there are distortions in the fixed income market right now that have created some interesting opportunities. Now that you have yield, so if you're an investor that needs income or values income, the I I I I believe that the danger on interest rates is on the short end. So you might get some duration and some longer duration bonds that they already sold off. That they really sold off because of lack of liquidity, but they're solid credits and you could get a very interesting yields there. So either through a direct bond or an ETF that invests in bonds, that's something that before it was not really worth it. Now it's worth a second look. I still like energy, traditional energy. That one until geopolitically things sort out with Ukraine and the imbalance in the oil market, those will continue to perform because many of the oil companies are just like I was describing. Their costs are pretty much fixed. The price of their product is up, so it's got up. That's a reality. Take advantage of that. I like financials right now. I it's obviously the fear is that, especially on like commercial banks, that credit quality will deteriorate. However, their balance sheets are really strong. I don't think that even if we go into recession, it's going to be all that deep of a recession. However, now they could make money at a higher level of interest rates after years and years of not having an interest margin.
Yep.
So that's something that's also of interest to us. And right now, we've always traditionally, historically favored quality. Um, it's and that hasn't changed. It's right now. If you have something that may not be of quality, right now the quality and the non-quality they both sold off. Take the hit, wrap the bandage on, switch over to quality because I think when things sort out, the quality will come back and the non-quality will stay down.
Sorry about that. Just had to restart my camera up right quick here. But definitely one of the things that I like that you commented there is that you guys, Carlos is saying it best here. Sometimes you just got to take the Band-Aid off, right? And I think that's the important part here is sometimes realizing when you need to actually just kind of figure out what the long-term situation is versus the short-term situation. And sometimes we are going to be battling in that short-term situation, but we need to always think about the long-term, and the results that are in the short term are not the same that could come out of this opportunity. And sometimes it's okay to take a little bit of a hit. Like he's saying, take your punch and then figure it out from there, because there's nothing worse than being stuck as an investor. And I think that's what Carlos also is pointing to.
And there's nothing written that you're going to make the money back in the same stock that you lost it.
100%. I think that one's probably the best tip that we got today. Thank you, Carlos. Appreciate you joining us. This is Carlos Legaspy, the president and CEO of Insight Securities. Where could they find you if they want to find a little bit more about you, Carlos?
So, I wear two hats. Insight Securities, our domain is insightAmericas.net, INSIGHT, Americas in plural.net. And then if you're interested about my book or my public speaking, and I do a lot of, emotional training, that's on carloslegaspy with a y.com.
Hey, check it on out, guys. And I might have to check out those. I always love some psychological tips. So thank you, Carlos. Appreciate you coming on.
Thank you.
All right. All right, guys, that's going to do it for us here. We're going to start wrapping on up. It's 2 o'clock already, so I got to get you guys on over to the roadmap. If you guys know, I actually got some of their swag on right now. It's called Benzinga. So check out the roadmap. This is going to be coming on next. They're going to be talking about how you can potentially protect your NFTs. So if you got an NFT, you might want to catch this show. But I hope you guys enjoyed right here, Stock Market Movers, where we touch the headlines, get to the expert opinions that you guys want to hear to keep the informational edge. That's what Benzinga is truly all about. That's what we're here for, is to give you guys the information, get to the experts, and of course, let you guys make your investment decisions. I'll be here tomorrow. We'll keep battling. Of course, we got the boot camp tomorrow, so you guys might miss out on some stock market movers action. But I'll be back Thursday and Friday. We'll be back every weekday unless we have an event. So let's keep battling here. And I hope you guys enjoyed the show. Hit up the comments. Let me know. What do you want to see more of? Longer interviews? Some more coverage on what was hot, what was not? I'll definitely get to it. And I'll see you next time right here on Stock Market Movers.
Check